Welcome to my YouTube channel. Dear students, we'll be discussing in this video about the theoretical aspects of the single entry system. The single entry system, it is the first chapter in the financial accounting of Rani Chennamma University as per CBCS syllabus. As far as the books are concerned, only one unit is removed here, that is a departmental account is replaced by fire insurance accounting. So when you are referring to the books, even the earlier books also can be referred here. Only thing is the fire insurance accounting replaces the departmental accounts. Kindly watch this video till the end, like it and subscribe to my YouTube channel. If you have any comments, please put your comments in the comment box. Without wasting time, now let's move to the presentation here. Let us have some introduction about the single entry system. As the name itself indicates, single entry, that means only one entry will be recorded in the books of accounts. So there is no any compliance of the principles of a double entry system of bookkeeping here. Hope I know the principles of the double entry system, like in case of the real account, debit what comes in, credit what goes out. Rules of accounts are not at all maintained in case of this single entry system. This system is adopted by the sole proprietors. Then there is no requirement of qualified accountants to record such transactions here. In simple way, single entry means a system of maintaining the accounting records of a business transactions in a manner convenient to the trader, wherein double entry principles are not at all applied. So always this system is an incomplete, unscientific and unreliable form of bookkeeping. Now let's look into a definition given by L.E.L. Kohala, how he defines a system of bookkeeping in which, as a rule, only records of cash and personal accounts are maintained. It is always incomplete form of accounting varying with the circumstances. Now let us analyze this definition. Even the single entry system is also considered as one of the methods of bookkeeping here. It records only those records relating to cash and personal accounts. However, the other records or other transactions related to the nominal accounts are not at all recorded here. It is always an incomplete form of accounting varying with the circumstances. Here varying with the circumstances means depending upon the situations, it will be recording the business transactions in the books of accounts here. Now let's move to the next slide here. Features. Of course, it is a method of bookkeeping which does not record both the aspects of the transactions. So each and every transactions are not recorded and each and every aspect of the transaction is not recorded. It records only those transactions relating to personal accounts, that of debtors and creditors, and cash and bank are usually maintained here. The other personal accounts, real accounts and normal accounts are not at all maintained here. So that's why it is an unscientific system of bookkeeping. It provides a partial information to the user and it requires only less number of books to record here. And as a result of that, it is more suitable for small business concerns. Now let's look into the types of a single entry system. There are three types here. One is a pure single entry system, simple single entry system, quasi single entry system. In case of pure single entry system, only the personal accounts of debtors and creditors are maintained, whereas the rest of the accounts, they don't have any scope to be recorded under this system here. Simple single entry system. In case of simple single entry system, only the personal account and along with the personal account, cash book is also maintained. Even the bank book also is maintained here. In case of pure single entry, only the personal accounts of debtors and creditors are recorded, whereas in case of simple single entry system, along with those personal accounts, the cash and or bank book are recorded here. In case of quasi single entry system, personal accounts, cash book and other subsidiary books are maintained. Here the subsidiary books like purchase books, purchase returns book, sales book, sales returns book, bills receivable, bills payable book, all these books are maintained here. Now let's move to the next slide, that is advantages of a single entry system. It is a simple method of accounting as it records less number of books. It is economical system as it does not require a qualified accountant to record these transactions. Then there is no delay in recording of the transactions because it will be recorded as and when the transaction takes place. Then it is more suitable for small business concerns because it requires less number of books. Now let's move to the next one, disadvantages of single. It is a defective method of accounting here because it records only one aspect of the transactions, and as the personal, real and nominal accounts are not fully maintained here, so there is no any possibility of preparation of the final accounts. The trial balance cannot be prepared and hence the arithmetical accuracy cannot be checked here, and whatever the accounts are maintained, they are not reliable here, and there is scope for misappropriation of the funds. Suppose, say for example, if 100 rupees spent, it may be recorded as rupees 10 only, and this method of accounting is not recognized by the Income Tax Act 1961 here. Now let us make a distinction between single entry system and a double entry system. Twofold aspects of the transactions are not recorded under single entry system, whereas in case of the double entry system, twofold aspects of the transactions are recorded. That means here, in case of the double entry system, every debit will have a corresponding credit which will be recorded in the books of accounts, which enables to find out the errors. But in case of single entry system, the twofold aspects of the transactions are not at all recorded. Under single entry system, only the personal and the cash accounts are maintained, whereas in case of the double entry system, all types of accounts are maintained here. The trial balance cannot be prepared and hence arithmetical accuracy cannot be ascertained under single entry system. In case of the double entry system, the trial balance can be prepared because all the types of accounts are maintained and hence arithmetical accuracy of the business can be ascertained here. The final accounts are not prepared under under single entry system, whereas under double entry system, final accounts can be prepared and the financial position can be revealed here. The accounts are not reliable under single entry system, whereas in case of the double entry system, the accounts are reliable. The single entry system is most suitable for the small business concerns because of its economy, whereas in case of double entry system, this is suitable for all types of business concerns. The financial position revealed by adopting this method of system is not reliable, whereas in case of the double entry system, the financial position is reliable. Now let us look into this one here, the statement of affairs. Hope you might have prepared this statement of affairs in your PU course. So here the statement of affairs is nothing but the summary of the assets and liabilities on a given date. It is just like a balance sheet. The very purpose of preparing of this statement is to find out the opening or the closing capital, liability, any missing liability or any missing asset on a given date here. And the records of the assets and liabilities which will be recorded in this statement are based on either on actual basis or partly from estimates and partly from actual records here. Now let's make a distinction between the statement of affairs and the balance sheet. Under the statement of affairs is prepared under single entry system, whereas balance sheet is prepared under double entry system. The value of the assets and liabilities shown in this statement are partly from the actual records and partly from the estimates, whereas in case of the balance sheet, the value of assets and liabilities shown in this sheet are from the actual records. The financial position shown by this statement is unreliable, whereas the financial position shown by this is reliable here. The purpose of preparing this statement is to find out the capital or value of assets or liabilities on a given date, whereas the balance sheet is prepared to find out the financial position of the business on a given date. Now, let us go for the core aspect of this chapter, how to convert the single entry into double entry. In the single entry system, you were preparing the statement of affairs, then a statement of profit or loss, then revised statement of affairs. Here in this case, the steps involved here, preparation of the statement of affairs. Of course, by taking the values of the assets and liabilities, the statement of affairs is prepared. The purpose of the preparing the statement of affairs is to find out the opening capital or any value of the asset or the liability. Then the next step here is preparation of the cash book. Here the cash book, it is nothing but the summary of the receipts and payment of cash here. So this is prepared to ascertain either opening cash balance or closing cash balance or expenses paid in cash or the income received in cash here. So for that reason here the cash book is prepared here. Then the third step here, preparation of the adjustment account. Here you must be very careful while preparing these accounts here: total debtors account, bills receivable account, total creditors account, bills payable account. Here the total debtors account, it is prepared to find out either opening balance of debtors or closing balance of debtors or cash received from debtors or the amount of the credit sales. Then the bills receivable account, it is prepared to find out the opening balance of bills receivable or closing balance of bills receivable or any acceptance received or cash received against the bill. Remember here there will be impact of the bills receivable account on the debtors and even the vice versa. So that's why you must be very careful while preparing these accounts. Then the next one comes here, a total creditors account. This account is prepared to find out any of the following missing items, that is opening balance or closing balance of creditors or cash paid to creditors or credit purchases made here. So these adjustments, when you prepare the adjustment accounts, that will help us to prepare the final accounts here. So these accounts are necessary for the preparation of the final accounts, so that the conversion of the single entry into double entry can take place here. Thank you for watching the video. If you have any questions, doubts, please put in the comment box or the classroom comments. Thank you.